Well, you've just listened to the Central Bank Governor of Nigeria, Mr. Godwin Emefiele, reading out the deliberations and considerations of the 10-member Monetary Policy Committee that held its two-day rate-setting meeting in the nation's capital, Abuja. It is the last meeting for the year, and of course, he said that the committee met under mixed and subdued circumstances, taking a look, of course, at developments on the global economy. He talked about Brexit. He also talked about the U.S. elections, which in the coming days will continue to affect how global economies shape up. Even though there has been a modest recovery in oil prices, we still see that that has not been enough to take most of these economies out of danger zone. Coming back home, he talked about some of the domestic issues, including low fiscal activities, talked about also the high cost of power. Now, we'll be crossing over to our Abuja studios, where Channel's business news editor Bosun Omofaye is standing by with a panel to take a look at the decisions that were announced today by the Central Bank Governor at the end of the rate-setting meeting. Of course, the general consensus was that the Monetary Policy Committee would leave all rates unchanged, and that announcement has been made confirming that. So we have the monetary policy rate unchanged at 14%. That was increased 200 basis points in July at its July meeting from 12 to 14%. Cash reserve requirement remains at 22.5%. We have liquidity ratio at 30%, and of course the asymmetric window around the monetary policy rate still at plus 200 and minus 500 basis points. But taking a look at some of the issues that he actually raised, particularly with regards the forex market, he says that the security agencies should keep up their clampdown on illegal forex dealers. Don't forget, very recently, Department of State Security actually raided some segments of the market and arrested those termed to be illegal traders of foreign exchange on the streets of Lagos, because we've continued to see a wide disparity between the official, that's the interbank foreign exchange market, and the parallel market. And this is because we see that most sectors of the economy, particularly manufacturers and those in the agriculture sector, seeking foreign currency. And so when they go to the interbank foreign exchange market, most of these can't access it because they're part of the items or part of those who have been prohibited from accessing forex from the interbank foreign exchange market, and so they go to source their foreign exchange from alternative means, and this has continued to increase the disparity that we've noticed. But again, he also sounded a word of caution to bureau de change operators, advising them to stay within the guidelines as stated by the Central Bank of Nigeria Governor. But we're going to cross over now to the nation's capital, where Bosun Omofaye, Channel's business news editor, is actually live with me. Bosun, thank you so much for joining me on the program. We had a little bit of issues connecting with you earlier, but of course, I'm not particularly surprised with the stance of the MPC meeting, but I'm sure neither are you.
Yeah, well, we discussed this on Monday, didn't we, Harriet? You remember on Friday, Godwin Emefiele, the central bank chief, spoke to bankers at the annual dinner, Chartered Institute of Bankers, and you remember in paragraph 35 of his statement, he read a 40 paragraphs statement to the top banking executives and what have you on Friday, and that's the final meet with between him and the rest of the banking community for 2016. It's an annual ritual. And I remember I pointed out in paragraph 35 there on Monday morning, and we had this production discussion, and I said, look, with what Godwin Emefiele said on Friday, and I'll quote that sentence all over again, Harriet. He says, with ours at 18.3%, and he was referring to inflation, one must question the judgment of cutting interest rates at this time. And that single sentence, remember, we pointed it out, that signifies that the central bank will do nothing today, Tuesday. So it's not surprising. He said it on Friday last week. It was here that interest rate will be left unchanged. So there's nothing really new as far as do nothing is concerned. But there are consequences for doing nothing, definitely. whether intended or unintended consequences. That is what we'll have some few minutes to discuss about. Harris, just stick around and listen to this conversation. Ogo Kitty, who is the economist and chief executive officer at Time Economics, is still here in the studio here in Abuja, Channels Television, as well as policy and financial analyst, Tokwe Fasho. Gentlemen, thanks for standing by. We appreciate your time. Ogo, let's start with you. This is do nothing, but there will be consequences. So let's talk about the consequences. The decision have been taken already.
Well, I think, as you said in your introduction just a few minutes ago, it is not surprising that the rates have been left unchanged. It does not mean it was easy to leave it unchanged, but it was not surprising. If you look at especially when the GDP figures came in yesterday morning, I mean, it was very, very depressing. I'm sure many people had thought maybe if the economy contracted at all, we're probably talking about 1% or thereabout, but we had 2.24%. And if you look at the inflation that we've been having, although the last month inflation was the first rise, and I think the governor actually
September to October,
was the first increase in the rate of increase that we've had since May. So that was something that we also needed to consider. So when you look at the price output dynamics, and I'm sure the unemployment figures will come also later this month, it was just a situation of if we cannot help the economy in relation to improving output, can we just stay where we are? It's a cautionary move. Let's stay where we are and let's see what fiscal policy and other measures that we can use to improve growth. Let's see what happens. So I think it was not surprising.
This seems to justify what you said earlier that you think is a do nothing. But again, if you look at the statement from the central bank chief that look, the capital importation that we saw earlier is fading out, looks like that's confirmed what happened at the last debt auction by the DMO that we put 95 billion on the table. We got less than 40 billion naira. That looks like the foreign investors or foreign portfolio investors, you believe this is hot money. You don't seem to have much confidence in that we should position our interest rate in a way that benefits portfolio investors.
Well, it works in the very short term. Because we do have a dollar issue and we need as much dollars as we can get to continue to try and finance our imports. But having said that, I don't think it's what we should lay a lot of store on, if you like, in the long term. But if we would look at, of course, I kind of guessed right that they were going to keep the rates as they are. The implications is that there won't be a further rush in FPIs for portfolio investments coming in. At the level where it is, and I think we were discussing on the sidelines that some of the portfolio investors are even asking for higher yields, and I think that 17%, 18% is fairly good enough, Mind you, the fact that there's a trade-off between the stock market and the bond market. Exactly. Many people are rebalancing their portfolio into bond market and basically killing off the stock market. Of course, by maintaining the rates at where they are right now, it can't spoil growth. So if we are seeing minus 2.6% in the last quarter, chances are that the decrease in GDP is going to continue. And of course, that inflation as well, because leaving the monetary policies as they are means that all the other conditions surrounding where we are right now will continue to be. In which case, fiscal policy really needs to kick in. However, mind you, let's quickly say that the Minister for Budget and Minister for Trade and Investment did say that we've seen about 20 billion in terms of inflows dollars this year. People are asking, okay, where did the money go to? Or maybe the outflows were more than the inflows, However, the issue being that the fiscal policies, have they been properly targeted? There's this other statement yesterday that we have spent about 3.7 trillion this year that has gone into the economy. And then there's this idea, and there's this also, there's a way they said that 79% of the budget had been met, So people are asking, where's this money? Is it well targeted? Are we reflating the economy the way we should? The key issue is this, Bosin, that the inflation we have on hand is, of course, we know, is a cost push inflation. If you're going to slow that down, it seems like unlikely now that it seems unlikely we're going to be able to slow down that inflation using the instrument of interest rate. So what else do? We look at the cost that manufacturers are bearing. Fiscal policies need to come in. You need to put money in the pockets of people, increase, ability of people to purchase, purchasing power and so on. And then give more businesses to those who are
Nice way for Godwin Emefiele and the rest of his team to hang everything back on the head of the executive branch.